Hey, good morning, everybody. Thank you for joining me. Some of you are joining me because in Weibo last week I took $25 and turned it into north of 100, a return of like what 300%. Robinhood, 217 bucks, north of $1,000, return of 415%. So it was a great week. So I understand you're here. I want to do that for your accounts. That's what you're thinking. How are you going to help me today? So generally, I go over the market dynamics. I help you process the psychology of the market. And then people will say, well, damn, man, you're a good trader. No, I'm a terrible trader. I enter positions too soon. I don't secure enough profit. They go even higher. I sell too soon. So I'm guilty of that, but I've got good strategy. And that's what I like to share with everybody on how, I invest, how you're looking to invest. So I generally talk about the market, and that's what I'll do this morning. A lot of people on Twitter are so bearish the market. They're like, this shit is going to tank. There's no liquidity in the market, and they're right. So let's talk about that real quick before we bring up the chart. Liquidity in the market. So understand, liquidity allows you to buy and sell positions. As liquidity gets drained from the market, and why would it get drained? Because the Fed's running out of money. They just passed the debt ceiling. Now they need to restock their piggy banks. How are they doing that? Well, today, which they announced on Friday, June 2nd, they're doing three treasury bond auctions of totaling, I think, $163 billion. So who's going to buy that? Banks. When banks use their money to buy treasury bonds, what are they doing? They're selling some stocks. They're lightening up on other assets they own, which could put downward pressure on the market. So that's what everybody on the Twitter universe and in public opinion is thinking. But we've been talking about the market going down for a number of weeks. And what happens? We're reaching like February highs again. We're reaching ridiculous valuations, numbers. So when should it stop? When could it stop? It might stop when we have CPI next week on the 13th, and then you have Fed coming out on the 14th. Now, already baked into the market is no Fed increase for the 14th. Remember, I was like, yeah, they got to increase for June. Wait. The Fed is really worried about recession. I know supposedly they don't care about the markets and shit like that, but I would almost guarantee it. Let's say I would put it at 90% they were going to increase and have a rate hike. Now I'm the complete opposite. I'm like 90% they're not going to have a rate increase. And if they don't have one in June, right, and things kind of trickle down and inflation comes down a little, and we're talking about summer, but gas prices aren't skyrocketing, then maybe they don't for July. And then they're thinking, okay, well, maybe they will get those two priced in rate cuts by the end of the year. So that's why the market is bullish. So I used to hate when analysts would come out and they would say, yes, the market's going up another 5%, only to come back in late summer another, 7%. So I should buy now because it's going up 5% and then it's going down. So unfortunately, I'm jumping on that bandwagon. I'm one of those people who's now saying, I don't care what happens today. And we'll talk about Monday's day of trading. But I do believe the markets are going to push higher. I don't know if it's 432 we're going to see rejection, 440 on the SPY that we're going to see rejection. And then when we reject, where are we going down to? Well, we could talk about the first line of support would be around 424. So if we do come down 424, lower price point than 424, we can go to 408. We can consolidate all the way down to 404. But understand the chart that I have up right now is, let's see, I think it's a 1 hour chart, which dates us all the way back to, I guess, we include all of May, the end of April. So I'm looking at a 2 hour chart. So what is that showing us? Well, it's showing us we spiked off some good volume. We gapped up. Now, yes, gaps get filled. So eventually we are going to fill this gap. All right. We're actually going to come down probably I don't know if we go to 408. We're definitely coming down, but we're going up first. I mean, this right here, 2 days consolidation, you might see 2 more days. In fact, let's talk about the past couple of Mondays, all right? I like to analyze market and pattern. So let's go back 4 straight Mondays. What do we seen in the market? Well, we've seen a very tight, narrow range of 3 or 3.5 points on the SPY, okay? So you could do the math, and I'll do the math with you. We've seen light volume days. So we've seen some movements of like 1 point, like the SPY. I'll give you an example, and we'll just get into the example real quick. Let's say we say 3 points on the SPY today. That's been the range for the past 4 Mondays, 3.5 points. But let's just keep it simple mathematically. Let's say 3 points. So you're saying, okay, well, I think the SPY is going to dip down to $426.50. So if they find support on the SPY at 426.50, and we know that's the bottom of the day because we hit it once, we hit it again, we saw a double bottom. Where's the SPY going to finish up today? 429.50. So if I had to give my prediction for today, that's exactly what I think is going to happen. I think we're going to touch the 426.50 wherever we bounce. Maybe it's not 426.50, maybe it's 427. Maybe it's 426 flat. And then you're going to go up 3 to 3.5 points, and that'll be the top because I still think they're buying the dip. I still think big money is buying the dip. Now, it's true that a lot of institutions are short. In fact, let me get out with these stories before we talk about the SPY range for today. I've got a bunch of news stories that I released. First off, if you're trading bad, don't worry about it. You've got like the teachers' retirement in California, $311 billion. They're in, what are they? Oh my God, it's so sick. They're in Nikola, which is down 50%, Bed Bath & Beyond. And if you joined me when Bed Bath & Beyond was going bankrupt, I warned everybody to get out when it was still had some value. So the fact that institutions and large pension funds have positions are crazy. All right, let's talk about oil real quick, because if you want to get bullish anything, you could be bullish energy. Why? Okay, Saudi Arabia is cutting oil production by 500,000 barrels, in addition to a voluntary 1 million cuts per day. Iraq's going to do 211,000 barrels a day. Russia's going to extend voluntary production cuts, and OPEC agrees to a new production target of 40.5 million barrels a day. I think they're cutting it by like 3 million barrels a day or something to that extent. Remember, the Saudi prince came out last week and he said, don't short oil. He blatantly told everybody, do not short oil. And I think oil was around like $72. Now it's pressing, it was 75 this morning, or maybe it was 70. All right, here we go. Big techs have some of the highest short interest in the market. Last month, investors added $3.57 billion to their short position against Tesla. Well, that's absolutely nuts. So when you see Tesla squeezing up from 195, and I bet it's green this morning again, to 216, it's probably on its way up to 232. If I had to put a number on Tesla, I think we see 232 before we see 200. But people are saying, well, tech's going to throw up. Tech's overvalued. Yes, I still think we have room to run. So on pullback days, I'm going to see if they're buying the dip. I'm a bear, but that's still my trading philosophy right now because it's successful. And then I get in, I get out, and I secure profit. Anybody that's new to following me, 3 S's, right? Trade safely. Okay, that means wait for a great entry. Wait for an A+ entry. Don't just jump in because it's 9:30 and the damn market is open. The market is open all day, and you're trying to be an efficient trader, not an active trader. So pick out your position. When you pick out your position, underbid yourself. Okay, but the 3 S's: trade safe, secure profit. We're not all hitting home runs. I explained compounding last week. My account, how they grew. 3 trades. I was in AMD puts, went from 126 down to 118. I got out at 122. I didn't even secure all the profit. I secured 70% versus 250%. Then I got into some Uber calls because Uber found a nice baseline at $37.10. I got in that trade 3 times. Uber, I got out around 38. Why? Because it had some resistance. My last exit on Uber was 38.16. Uber's pressing close to 40 this morning. So again, I left profit on the table. Good strategy. And my third trade was coin puts when coin was spiking. Why? Because I looked at the Bitcoin chart and I said, Bitcoin could still come down a little. It spiked up. It came back down. Coin came down. Secured profit. That was 3 trades that returned me, compounding small hits, 400% of the week. It's crazy. So you don't have to overinvest your whole account. Okay. So again, big tech is short. They're short Tesla, 2.5 billion against Nvidia, and 7.26 billion against Meta. So if I had to play one of these, if I had to get on a short position with one of these 3, it wouldn't be against Tesla or Nvidia. I guess I would short Meta if I had to, agree with big tech. All right. What else? Well, I've got my daughter's thing. Okay. Monday, economic numbers this week. ISM manufacturing numbers. Monday, factory orders. Monday, trade balance on Wednesday. Not really interested. Consumer credit doesn't really interest me either. Consumers are spending a shitload on their credit cards, and there will be a bunch of delinquencies. And I said that in December, that people won't care and they'll buy Christmas gifts even if they can't afford them. And then jobless claims on Thursday. So I'm a buy the dip guy until Thursday. I think jobless claims, if they increase and jobless claims reduce, then the Fed might have to step it up for June. Right now, the Fed's on a pause for June. So that could throw it off, but that's Thursday pre-market. So I got Monday, Tuesday, Wednesday. I think 2 of those 3 days will be green. There you go. I mean, I make assessments. Okay. Treasury is set to unleash a tsunami of bonds to fill up its empty piggy bank, 170 billion. It's actually 163 billion. And again, I believe banks will be purchasing most. We have earnings this week. If you want to know, you got to go into public Discord. I already posted this there, but I'm interested in Neo at the end of the week. Play, Love, DOCU, and Stitch Fix. Why? Because Stitch Fix loses money all the time. Base is there, Fuel Cell. So it'll be interesting. All right, here's one that everybody's been sharing on Twitter, which is why people are bullish, okay? We just saw the largest inflow of tech ever, okay? So they're buying the shit out of technology, and we know that because tech just keeps going up. We saw NVIDIA rip. We saw Apple rip. Apple's introducing their new virtual reality glasses, goggles coming out. What is it? Monday, Tuesday, Wednesday of this week. I think they have a price tag of $3,000. So we'll see how that plays out. People are saying, oh, the Qs, the SPY, it's overbought. We're over 70 on the RSI. Expected dump soon. Man, they're all calling a dump. When everybody calls a dump, what happens? The market goes higher. That's just a simple fact. The market goes higher. Now, I do believe a dump is coming. But again, the market in reality should have dumped like months ago. The fact that it's floating higher or fading higher on lighter volume, but then we get the debt ceiling passed. Debt ceiling is never a good thing. So everybody's basing that on history. So I get it. But the market's here to take your money. So would it surprise me if the market goes up Monday, Tuesday, Wednesday combined, 2 out of 3 days are green, and then we get into Thursday's jobs numbers, and then we roll into the weekend where we have CPI next week, which could put a hinder thing. Then if the Fed says pause, it's always a buy the rumor, which the market's buying the rumor. The Fed's going to pause, right? Where market's getting strong. And when the market actually sell the news, when the Fed says we're going to pause, and the market should say, yes, we like pause. Instead, it's going to go boo, like that. So I'm going to prepare myself. I think people that are calling the top on Twitter are early by a week, or early by 4 days, or early by 8 days. Why does that matter? Because you're losing IV. If you're buying puts today and you don't give yourself enough time to be right, if you're on our platform, you know to give yourself enough time to be right. But if you don't give yourself enough time to be right, then you'll be in trouble. All right, let's see. I think that's a good story. And then we'll get into some stocks soon. So let's go and pull up the chart right now. And if you guys want to talk about any stocks, let me know. So again, I've got the 2-hour chart here. What you're seeing again, if you go back a number of days, positive inflow. We're seeing influence the market pushing higher, pushing higher. What are we seeing? Consolidation, lighter volume, outflow. Okay, so I'm going to open this bad boy up. And let's just go down. Can I go down to like 4 hours? There we go. 4 hours. Let's do that. See if we get double the time. All right. So as you can see, I mean, the market, which I thought should be giving back and had some good sell-offs or consolidation, is still getting bought up higher. And there's still $5 trillion on the side. So again, if we look at the 5-minute chart and basically just look at what happened on Friday, we gapped up, we consolidated. And once we hit yesterday's or the morning open, we shot right back up. Yeah, there was a good sell-off at the end of the day, heading into the weekend, right? Treasury's going to, Treasury's going to sell 170 bonds today, 170 billion. But let's look at the market. I mean, really, what you're seeing is consolidation. So if you see a tight range, and it's possible we'll see a tight range of 3 points. So I already mentioned this to start off the broadcast, that each of the last 4 Mondays, 3 to 3.5 point range. Meaning, if we see the bottom today, right around here, so we drop down and we see 426.69, then the top is going to be 429.69 or 429.73. I'm telling you, once you see the bottom, you can go up 3 points. If we spike off the open and all of a sudden the morning gets bought up and you see 431 is the top side, guess what? We're going to come back and we're going to touch the 428 number because there's going to be a 3-point range and we're not gapping up. So again, for me playing the market today, it's safety. What am I doing? I don't trade with emotion. I don't really care if I'm wrong or right. Let's say I'm wrong about my prediction, but I figure it out. Well, I'm still on the sidelines. I will figure it out. I will get invested in whatever it is, and I'll make my money. Secure profit, safety, and stress-free was the third S. Because if you're investing, man, you hate to stare at your phone, especially if you're working a real job. You're like, man, I'm up 22%. Now I'm down 22%. Now I'm down 30%. Okay, I'm back to even. What should I do? Your real job is suffering. Some of you are like, I don't even like my real job. I want to be a trader. I don't care. I get it. But if you're going to be a trader, you need to secure profit. So secure profit, safe trading, stress-free. Just remember those three. And it's all about patience. It's all about planning. So again, My prediction for today, again, narrow day, 3-point range. If 327 flat, right, 327.20 is the low, then I think we're going to see 330 and 20 cents. If we reject, let's say we reject early, I don't think it's going to happen, but let's say we reject right as we open, 428 and a quarter, then we're going to see 425 and a quarter. We're going to see this range right here, okay, if we reject right away. Now, when you're looking at volume, please, the first 30 minutes of the day by 10 a.m., you want to see at least 10 million volume on the SPY. If you don't see 10 million on the SPY volume-wise, then you know it's a light trading day. Light trading days mean manipulation. Manipulation means you could see a quick drop of 1 point or a drop of 1.5 points, then it'll get bought back up. Then it'll drop 1.5 points, something like that. So please be wary of that. If you guys have any stock questions, please ask them on the side. I'm going to go over some of my stocks. Oh, yeah. Here's the other thing. I made a post over the weekend. Please, sorry, I have to share it this way. Initial balance, $100. Ending balance, $181,000. Effective rate, 1.5%. I will explain. You start an account with $100. There are 504 days in a 2-year trading cycle. From today until 2 years from today, June 5th, my birthday, 2 years from today, 2025. Start with $100 today. If you make 1.5% every trading day on your account. So people will say, well, you can't do that with stock. You are correct. You are not going to pick out Lucid today that goes up 1.5%, sell it, have your money available tomorrow, and buy NEO tomorrow. I mean, for example. So I'm only talking about options. You start with 100. On average, you're making 1.5% a day, meaning the end of today, I want to have 101.50. Okay, the end of tomorrow, I want to have 102.68. Okay, it's not like killer amounts. You're making 1.5%. You do that for 504 straight days, and you'll have $181,000. Now, let me simplify. Let's say you don't only want to trade once a week. You need to make that 1.5% compounded for the 5 straight days. So if you make one trade for the week and you make 8 or 9%, you're solid. So I invest 100. I make one trade this week. I make 14%. I sell at $114. Great. Next week, take that 114. I make another 14%, 10%, whatever it is, 126. That's how you could trade and get from that 100 to 100. You don't need to trade every day. That's my point. So you're saying I'm at work. I drive a school bus. I work on an oil rig. Yeah, I whatever you do, it's I'm here to help you understand your limitations based on your day job or whatever you do during the day. Okay? You want to achieve financial freedom. You don't have a lot of money. I'm trying to explain how that's possible. All right. It's not a scam. People are like, well, where's your $1 billion, Matt? You're such a smart guy. Me, I already told you, I'm certainly not the best trader. I'm early on entry. I don't hold for max profit, but I have great trading strategy. And that's what I provide to Discord. That's what I provide to YouTube. It's up to you guys to know how to hold longer, how to wait on entry, unlike me who has FOMO. But the point is, I'm giving you an idea. So someone said, dude, this guy's a scammer. Understand, it's math. I didn't create math. It's simple compounding. Me, I tend to take 2 steps forward and 1 step back. Some of you take 2 steps forward, 3 steps back. Understand, you're trying to avoid those steps back. You take a hit, a walk, a hit by pitch. Just don't make an out. You make an out, you're starting back where you were. Okay. So I'm going to talk about a couple different stocks. I have no positions in these stocks. They are on my watch list. So again, first thing I got is the SPY. Here's what I'm looking at. Again, the 1 month, we've got inflow. We're spiking. Again, I think we're heading to at least 432, but likely probably around 440 by next week until the market throws up. And we hit that 440, I happen to think we're coming right back to 424. So 440 to 424, I think we're going to lose 4%. I just think we're going higher first. I've got the Qs. I've got Rivian because I carried a position. Now, why did I carry Rivian? Well, if you're on Discord, you could see my latest searches in my trades. Why I'm carrying Rivian. 3 of the last 4 days, it's outflow. However, Tesla's ripping higher, and I'm looking to ride Tesla's coattails, and I've seen a shit ton of Rivians lately. Then on my watch list, I also have NEO, Lucid, Rivian, Carvana, Lee Automotive. Why? I don't have any of those positions, but if I see all the EVs going up, I know I'm okay to hold my position. All of a sudden, if I see Carvana off 5% and Lucid's off another 5% and Lee Auto and NEO, which were up over 1% pre-market, turn red, and my Rivian is still green, I would get the hell out. Even if I was in Tesla, I would get the hell out. If the industry is turning, then I would want to stay away from that. I've got Lulu, but I want to remove that. I've got Coin. Why do I have Coin? Because Coin sold off on Friday. Remember, I called $62 as an exit. So here's another lesson real quick. $62 flat to 65.22 Coin on Friday. 3-point range. Coin tends to move in a 6% range for the day. So if you're calling the top, which I did the previous day on Coin, and then I rode those Coin puts down, let's remember on Friday, Coin opened up 2.5%. My account was down 40%. However, my strategy on Coin was it was going to drop to $62. When it dropped to $62.70, I got out. I said, that's enough. However, my target was hit again. So great strategy. Coin was going to $62.07 on Friday. It actually went to $62. So, I mean, it's crazy that I had great strategy. I'm a normal trader, human. I can't help it. I sell sometimes too soon. That's just it. I had great strategy on that one. What do we want to look at? I thought I had some more stuff to show you guys. Let me just see. Oh yeah, here it is. Here was my Coinbase prediction. So why did I predict $62 flat or 62.06? Because that's where we started the previous day before we spiked up. So I said, if we're going to pull back before we can find support, it might actually be $62 or right around there. So that was my exit strategy. Now, as we dropped and I went from 40% red to like 40% green, I was like, holy shit, I've got to sell and take profit. So that's another one. Let's go back to watch list. Here we go. Bum, bum, bum. All right, I've got Chewy on the watch list. Why? Because a lot of people on our Discord are talking about Chewy. Now, as you can see, here's the 1 month again. There was a ton of inflow off earnings. What generally happens is there's generally consolidation for 2 or 3 days, meaning you'll see a little red mark like you saw on Friday, probably for 2 or 3 days, and it'll come down. It won't actually fill that gap, but it might come down to this support point or something to that extent. And that support would be like, what, $32? So Chewy's at 35. It shot up from 29 to 35. It went up, what, 20-something percent. It's going to pull back and find a consolidation level. So I missed my entry on Chewy. I'm hoping, well, I don't know if the market's going to be green today. I mean, Chewy's flat. We'll see what happens. I've got Uber. Again, I ran Uber up. I jumped in that first day when I saw green, and I thought continuation. We could see 40. In fact, one of those Uber calls is up. Let me just see where that is. Uber $37 call from last week is at, what, $2.82. My entry or my alert was $1.01 on May 31st. So May 31st, $1.01. The contract's at $282 each. Currently up $181 to 179%. Okay. So, I mean, I kept some for runner. I didn't get into the Chewy put. All right. So what other stocks we're going to talk about this morning? Sorry, talking about Uber. Again, you've got all the AI companies. So is there consolidation? Yes. How low can NVIDIA go? That's interesting, but we're surrounding NVIDIA. What other companies do I have? I've got NVIDIA off 1.28%, 1.37%. AMD off 1.46% because it'll follow. Palantir, which they now dubbed an AI company, it'll go about 50% more. So whereas NVIDIA is off 1.3%, Palantir is probably off 1.9. It's off 1.86. So, for example, if NVIDIA goes down 3 points today, right, 3%, Palantir will probably be down 4.5%. All right. The same is true on the upside. But Palantir turns to run about 1.5 times whatever those two run because it's more volatile. And then you've got AI, which I don't get involved because there was kind of a short squeeze there. I don't want to be there because if AI goes down, you could see it back in the $24 range, would be off 20%. If it goes up, we were seeing it press $40, which would be an 8-point increase, which would be a 22%. So again, stay away from that one. Again, you got UVXY. I've got the dollar. Why? Because if the dollar happens to rip higher at any point during the day, and that's a 1-month chart, that's your 5-day chart. Again, if we spike up here, then I know the market's about to sell off. Sometimes the dollar leads the way. You'll see the dollar spike, and you're like, well, the market's not selling off. Matt said it's supposed to. And then you look at your phone 10 minutes later, and then the market just freaking dropped. So if you're in calls like that, that's why one of the reasons I follow the dollar. If I'm in puts and I see the dollar spiking, I'm like, okay, I'm good. If I'm in puts and I see the dollar all of a sudden drop down, I know the market's about to spike, so I need to get out of those puts. Yeah, hit those likes, thank you. And yes, it is my birthday, so please double hit those likes. And I'm not accepting any T-bills, so nobody go out and buy any T-bills for my birthday. Okay, what Upstart after that? Same thing. Upstart, you can see it's been ripping higher. Upstart still doesn't have earnings. It's basically a squeeze if the markets do get bloody at any point. So if the markets get bloody at any point, I want to short stocks that are squeezing. I want to buy puts in stocks that are squeezing if the markets get bloody. So we see a turn and the markets keep going down 1.5% a day. Whenever that happens, might not happen until mid-June, might not happen to the end of June, might not happen until we're technically in recession, end of summer. Whenever it is. But when the markets start going down 1.5 points a day, the stocks that I am looking at to short and buy puts are the more speculative plays. The ones that were squeezing higher off no earnings, like an Upstart, Affirm. I've heard Affirm's going to be the next stock to squeeze. Again, Twitter talk. Don't pay much attention to it. I definitely never trade off Twitter talk. So please, hopefully you guys do the same. Again, I mentioned Meta this morning. If I had to take a negative outlook, why? Because Meta was like under $200. In fact, long time ago when Meta was 220 and then it dropped significantly, I was telling everybody, my friends at certain hedge funds were in at 218, 202, 198. Meta's at 272. That's why these hedge funds run, man. I mean, it's crazy. I mean, price target on Meta raised to 300 by JP Morgan. I mean, no doubt, because they heard that everybody's short Meta as well. So yeah, they're trying to push it to 300. What could happen when there's so much short action against any specific stocks? And you generally smaller market cap, not like Meta, Nvidia, Tesla, which I mentioned, hedge funds are taking shorts against. But shorter stocks, they squeeze, meaning they're like, hey, man, these people are 40% short. If the stock goes higher, they have to cover. If they have to cover, they're going to push the price even higher. So that's how that is. Got Walmart. So here, if you like Dow stocks, okay, you want some Dow stocks, you want to be bullish, you think the market's going higher, Walmart 148, 4 out of 5 inflow days. Walmart looks very similar to Disney. So again, if anybody wants to be bullish on Dow stocks, I mentioned airlines last week that I saw airlines were starting to turn around. They are on my watch list. So airlines run with Walmart, run with Disney, generally run with energy. Again, I mentioned the story about the Saudis and OPEC this morning, and you can see oil's pressing up for 2 days straight. Even if we're in recession, which nobody will admit, oil could run a little harder. The Saudis are telling you they want increased price. Meanwhile, our government had no money to buy oil, right? Our savings bank, our piggy bank was depleted. So when oil was down at $69 a share, $69 a barrel, we weren't buying oil. Now it's going to be up close to 75 this morning, 74. I think it spiked overnight to 75. Let's see where it is now. It is close to 74. Let's just get a latest view. 73.64. If you want to see oil spiked overnight all the way to $75 a barrel. Now, the people that figure out the spike, they're no dummies. So when oil dropped this morning pre-market to 72 and change, they were buying up oil. Now, would I be buying up oil? No, I would look to energy stocks and, Chevron, Exxon, Interface Energy. I'd look at some solar plays because more investments getting in the solar market. But again, if OPEC is going to cut production by 3 million barrels, then oil might go up to $77, $78, $79. What would that do to XLE? It would probably push it up closer to $84. Whereas XLE this morning at $80.86. So, XLE can run another $3 higher, which would be another 4%. So it's not happening today, and I wouldn't chase and I wouldn't go in XLE when it's up 1.3% pre-market. But I definitely look at that. Again, Disney, I mentioned, if you look at the Walt Disney, again, 3 straight days of buying. We've seen to around to the corner. I'd be more spec on Disney, but again, $90, $88 seemed like a good base. I mentioned that. I saw we could see $84 last week. Did we get there? No, we saw about $86, and then we bounced off that number. So I'm watching Disney. Oh, all right. I wanted to bring up Affirm, which they said could squeeze. So here's your Affirm. Went into earnings. I don't know what they did on earnings, but obviously it didn't drop since earnings. So it has a nice stable base. I might actually look at Affirm. I might move it up my watch list, which I'm going to do right now. Let's move it up. Stick on top. All right, great. Airbnb is fading for Dow. No other interest. Again, Apple's releasing their new VR goggles, but they've been selling Apple 2 out of 3 days. Okay, let's see what stocks you guys got. Nike. Okay, good. I'm glad you asked me to look at a stock because I'm about ready to head over to Discord and wrap that up. So let's see what we got for Nike. And anybody that likes what I do, please thumbs up. Yeah, okay. So Nike, I would be wary. Okay, we could either see a strong bounce on Nike, and if you see a strong bounce, then we're going to hit right back. What is it? Probably $114. Is that my mark? Yeah, 114, 109 first. We have 114. That's what I'm looking at. Nike's at what? $107. So if the Dow continues strong and the SPY goes 340, then yeah, Nike's going to run another. I mean, it ran 4% on Friday. So again, Dow play, Nike, airlines, Boeing. Those are Dow plays. Home builders. But remember I mentioned U.S. Steel, FCX, mining companies. They've had a good run up. So again, I'm going to look for support on that. I'm going to look for support and see where is it? Netflix is curious because Netflix has me curious because Netflix could easily run to 414 or it could pull back right to 384 level. So it could run 16 points up if I'm bullish the market, 16 points down. Now, I already mentioned that I happen to think the SPY is going higher before we have job numbers. I think later on this week on Thursday. Next week, we have CPI probably, Wednesday and then the Fed Thursday, or maybe it's Tuesday and Wednesday. Usually CPI is Tuesday. So maybe it's next Tuesday. So again, this week, I still am a bear, but I'm a bull thinking we're fading higher. I'm going to buy the dips. That's my strategy. I'm going to sell, secure profit. Remember, safe trading, so I can wait all the way to 1 p.m., 2 p.m. I can get in and out within 20, 28 minutes, 30 minutes if I'm right and I call the bottom or the top. So again, pay attention. And you want to get out and secure profit and be stress-free. Whenever I hold a position overnight or over the weekend, I'm like looking at my phone like it's going to matter. There's so much volume that happens during the market that what happens pre-market and after hours really could be a manipulation. It's less than 1% of trading happens pre-market and after hours. I thank you all for the birthday wishes. I can show them all off. They're all here. You guys are all awesome. I appreciate everybody joining me, and I'll see everybody tomorrow morning. Have a great morning, everybody. Be safe, secure.